Luxury wine collectors don't only collect luxury wine for the taste, but also the elegance, history, and prestige associated with luxury wine. Luxury wine collectors also recognize that some wines improve dramatically over time, and therefore luxury wine collectors are often willing to purchase luxury wine at an elevated price for the prospect of selling the luxury wine at an even higher price in the future. As a result of luxury wine collectors' desire to purchase and sell luxury wine at a later date, luxury wine has emerged as one of the most interesting forms of alternative investments. Today, numerous companies exist to provide luxury wine collectors with a platform to collect and analyze luxury wine pricing information and to facilitate the trading of luxury wine between collectors. Christie's, a renowned international auction house, hosted a wine auction in March of 2019, featuring hundreds of lots of luxury wine from all parts of the globe. Among the wine featured in Christie's wine auction, the wine that generated the greatest excitement among luxury wine collectors was a collection of 12 750-milliliter bottles of wine from the Burgundy region of France, which ultimately sold to a buyer for approximately $305,000. This translates to greater than $25,000 per bottle. To illustrate the magnitude of appreciation in the value of this wine since the last time it sold, in 2011, Christie's estimates that the same case would have sold for anywhere from $97,000 to $116,000 in today's dollars. Therefore, this case of wine increased in value by greater than 126% during the 8-year period from the time it was last sold to the time it was sold again at Christie's wine auction. In total, Christie's wine auction proved to be a successful event, with nearly 90% of all wine offered being purchased by bidders at the auction. Since the turn of the millennium, the demand for luxury wine in the secondary market has grown exponentially, from virtually zero in 2000 to approximately $4 billion in 2018. Although this amount pales in comparison to the estimated $800 billion invested in private equity in 2018, $4 billion is nevertheless a significant amount of money. However, if you're considering purchasing luxury wine to use as an investment vehicle, keep in mind that it is not as easy as simply selecting any bottle of wine you see and expecting the wine to appreciate in value. Only about 250 of the thousands of wineries worldwide produce wine that is considered investment grade. Therefore, the process of selecting the right bottle of luxury wine requires research, and there are a few key factors to consider when evaluating a wine for investment purposes. First and foremost, the geographical area of origin of the luxury wine plays a significant role in determining whether or not the wine will appreciate in value. Specifically, Bordeaux and Burgundy are responsible for producing roughly 80% of all wine sold in the secondary market for investment purposes. Therefore, if you have selected a bottle of wine from either Bordeaux or Burgundy, your chances of owning a luxury wine that will appreciate in value are likely to be greater than if you have selected a bottle of wine from another region. Bordeaux produces the most desirable red wines in the world using the red clay soil found in the region. Additionally, Bordeaux producers take the production of fine wines very seriously and adhere to very specific standards to ensure that only the best wines are produced. To demonstrate Bordeaux's commitment to excellence, Napoleon Bonaparte III requested that a classification system be developed to identify the top quality wines of Bordeaux. This led to the development of the Cru system, or growths, which ranks red wines from Bordeaux from 1 to 5. The Premier Cru classification is the highest classification given to red wines. These classifications were originally based upon the reputation of the vineyard and its price at the time of the original classification system's implementation in 1855. However, the classification system has only been modified twice since its original creation. Once in 1856 when Cantemerle was added as a fifth growth, and again in 1973 when Chateau Mouton Rothschild was upgraded from a second growth to a first growth, primarily as a result of the lobbying efforts of Philippe Baron de Rothschild, a member of the influential Rothschild family. When selecting a luxury wine for investment purposes, the type of wine you select is equally important as the geographical area in which the wine is produced. Fine champagnes can age perfectly for more than 60 years, and ports and fortified wines can age for more than a century. Therefore, if you choose to buy a wine that has already aged for 100 years, You will be paying an enormous amount of money for the privilege of owning a bottle of wine that has reached its peak maturity. However, if you purchase a bottle of wine today, prior to reaching its peak maturity, the cost of the wine will likely be substantially lower than the cost of the same bottle of wine at its peak maturity. If you choose to buy an inexpensive white or red wine and expect it to increase in value, you should follow the same advice you received earlier: drink the wine. However, the location and potential for the wine to age are not the only factors to consider. For many years, the opinions of the famous wine critic Robert Parker played a substantial role in influencing the prices of luxury wines. Mr. Parker's 100-point rating system was capable of increasing the value of a wine exponentially if he awarded the wine a perfect 100 points. When Mr. Parker awarded a perfect 100 points to the legendary Bordeaux wine, Chateau Haut Brion, 1989, the price of the wine increased substantially. Since Mr. Parker stepped down in 2013, however, his 100-point rating system is no longer the dominant force in the luxury wine market. Having discussed the characteristics of luxury wines that are suitable for investment purposes, how does the performance of luxury wines compare to the performance of the stock market? One common method of measuring the performance of the U.S. stock market is to examine the performance of the S&P 500 index. Similarly, the London-based wine marketplace, Liv-Ex, developed several indexes to measure the performance of luxury wine. Liv-Ex's top-performing index, the Liv-Ex Fine Wine 1000, returned approximately 42% over the last 5 years, which is slightly less than the S&P 500 index's 51% return over the same time frame. However, Liv-Ex's Burgundy 150 sub-index returned greater than 93% over the same 5-year time frame, exceeding the S&P 500 index's performance. Moreover, the top 1,000 Kiryus individually appreciated by 264% over the 15-year period from 1997 through 2012, whereas the S&P 500 index appreciated by only 144% over the same time frame. Therefore, if you had chosen the correct 1,000 wines, you would have exceeded the performance of the S&P 500 index by a considerable margin. Investing in luxury. Wine carries with it the inherent risk that the wines may be counterfeit. Due to the high prices commanded by some luxury wines, there is an increasing number of counterfeit luxury wines being manufactured and marketed as if they were authentic. If you are planning to invest in luxury wine, you will need to carefully evaluate the authenticity of each wine, and you will need to properly store the wines and obtain adequate insurance to protect your investment against loss. In 2012, for instance, Hurricane Sandy caused flooding damage at Wine Care in New York City, resulting in the destruction of many of the wines stored at the facility. It was later discovered that Wine Care did not carry adequate insurance to cover the losses suffered. Therefore, are luxury wines truly a viable form of investment? Keep in mind that the vast majority of wines are not worthy of consideration as investment vehicles. You should not go to your local grocery store and purchase multiple cases of wine in hopes of selling them for a profit. Additionally, if you do decide to invest in luxury wine, plan on holding the wine for at least 5 years before attempting to realize a return on your investment. In contrast to the ability to instantaneously liquidate a position in the stock market, it is impossible to immediately liquidate a position in the luxury wine market. Just as is the case with other forms of alternative investments, certain types of luxury wine with specific characteristics may outperform the S&P 500 index. However, without someone similar to Robert Parker providing guidance on which wines to select for investment purposes, it may be increasingly difficult to determine which luxury wine will be the next big winner.